Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. And today we've got a real doozy for you. It looks like Mineralys Therapeutics is trying to show us they're on the up and up, but maybe there are a few detours on the road to success. Let's dive into what Mineralys Therapeutics has been up to. This is a company focused on developing medicines, specifically for diseases driven by something called dysregulated aldosterone. Think of it like a hormone imbalance that can lead to serious health issues like high blood pressure and kidney problems. Their main drug candidate is lorundrostat, and they are really pushing it as a potential treatment for these conditions. Okay, now let's get down to the nitty-gritty, the financial numbers that tell the real story. Looking at their balance sheet, we see they had about $599.9 million in total assets as of the 30th of September 2025. That is up from just over $205 million at the end of 2024. That is a pretty big jump. And it mainly comes from a significant increase in their cash and cash equivalents and their investments. They're holding a lot more liquid money now, which is generally a good sign for a company in their stage. Speaking of cash, their cash and cash equivalents alone jumped from about $114 million in December 2024 to over $217 million by September 2025. That is nearly double in just 9 months. This huge increase in readily available cash is largely thanks to their recent stock offerings. When we look at the shareholders' equity side, the number of shares issued and outstanding has also grown dramatically. They went from about 49.8 million shares at the end of 2024 to over 78.9 million by September 2025. This, combined with the big rise in additional paid-in capital, shows they've been actively selling a lot more stock to raise funds. It is a common strategy for biotech companies to fund expensive research and development, but it does mean existing shareholders own a smaller piece of the pie. Now let's shift over to their income statement, or in this case, a statement of losses. It's important to remember these are unaudited interim statements. Mineralys continues to operate at a loss, which is typical for a clinical stage biopharmaceutical company. For the 9 months ended the 30th of September 2025, their net loss was around $122.4 million. This is a slight improvement compared to the roughly $128.9 million loss for the same period in 2024. The biggest chunk of their expenses is always research and development. For the 9 months ended September 2025, these costs were about $107.6 million. This is down from about $124 million in the same period in 2024. This decrease seems to be because some of their major clinical trials wrapped up, like the pivotal program for lorundrostat. This is a good sign that they're moving important projects forward and potentially closer to getting their drug to market. You might be wondering how they're funding all this research. Well, they're listed on the Nasdaq, trading under the ticker Mineralys, and it looks like they've been busy tapping into the stock market. Their main line of business is in common stock, and they've had some significant stock offerings. In September of 2025 alone, they brought in about $269.6 million after fees from a public offering. And before that, in March 2025, they raised another roughly $188.7 million from a similar offering. It is clear they're putting a lot of effort into securing funding. They also had what is called an at-the-market, or ATM agreement. Through this, they sold shares bit by bit. From April through September 2025, they raised about $27.3 million from these smaller sales. Looking back to February 2024, they also had a private placement where they raised about $116.1 million. All these fundraising efforts tell a story of a company aggressively seeking capital to fuel its development pipeline. Now, it is not all their own work. They have a significant license agreement with Mitsubishi Tanabe Pharmaceutical Company for their drug lorundrostat. They've already paid significant milestone payments for this license and could owe up to $155 million more in commercial milestone payments, plus royalties on future sales. This means their success is tied to how well lorundrostat performs in the market. A growing expense that is worth noting is stock-based compensation. It jumped from about $8.2 million for the first 9 months of 2024 to over $14 million for the same period in 2025. This reflects their efforts to attract and retain talent by offering stock options and awards, which is common in the competitive biotech industry. Looking at the cash flow statement for the 9 months ending September 2025, they used about $104.5 million in operating activities. This is a slight increase from the nearly $100 million used in 2024. The big story here is their investing activities. They used a massive $286.3 million in investing activities in 2025, mostly for buying marketable securities. This is a huge shift from 2024 when they actually had cash coming in from investing activities. This shows they are actively deploying their new cash into liquid investments. Now, for a bit of caution, the company acknowledges that changes in tax laws, like the recent One Big Beautiful Bill Act, could impact their financial situation. While they are still evaluating the full effects, it's a reminder that external factors can always play a role. And then there are the risks associated with regulatory bodies like the FDA. They've updated a risk factor to highlight how disruptions at the FDA, whether from funding issues or global health crises, could delay product approvals. This is a critical risk for any drug development company. So, what is the verdict on Mineralys Therapeutics? They're in a high-stakes game, trying to bring a new drug to market for conditions affecting millions. Their recent clinical trial results for lorundrostat seem promising enough to justify the FDA submission they're planning for late 2025 or early 2026. They've clearly been successful in raising a substantial amount of capital, which is essential for their ongoing research and development efforts. Their cash reserves look strong enough to keep them going for at least the next year. However, it is not all smooth sailing. They are still a company operating at a significant loss, and their ultimate success hinges entirely on lorundrostat getting regulatory approval and then succeeding in the market. The ongoing reliance on external funding, primarily through stock issuance, means that existing shareholders will see their ownership diluted. Plus, the success of their licensing agreement with Mitsubishi Tanabe means future royalty payments and milestone obligations could be substantial. The risks they've highlighted, like regulatory delays and changing tax laws, are very real and could impact their future. It is a high-risk, high-reward scenario, as most drug development stories are. They're making all the right moves to push their candidate forward with impressive funding, but the path ahead is still very uncertain. What is your take on Mineralys Therapeutics and their drug development journey? Do you think lorundrostat will be a game changer or another promising drug that doesn't quite make it? Let me know your thoughts in the comments below, and if you found this deep dive helpful, please hit that like button and subscribe for more corporate breakdowns. Also, we have a thriving Discord community where we discuss important filings like this one in real time. The link is in the description. Thanks for watching, and I'll see you in the next one.